Well, Dinshaw Irani is joining us now, Chief Investment Officer at Helios Capital India. Dinshaw, great to have you with us here. Thank you very much. Good to see you working and not, on a long weekend, extended weekend. So, Dinshaw, how are you feeling about the market? Things looked up a little bit, and then something or the other always crops up. 3 weeks back, it was this entire bank thing. This morning, it is a big jump in oil prices. But overall, how are things looking to you?
So, Prashant, thank you for having me on your show, and a very good afternoon to you and your viewers. As Gordon Gekko had put it once, money never sleeps, so I don't take much sleeps anyway. But anyway, so the fact is that we've been calling this out, Prashant, for a while, that we expect the markets to stay in a band. And I don't think that thesis has changed. However, the recent turmoil that one saw in the mid-sized banks in the US, there was a silver lining to it, actually, because the aggressive increases by the Fed, I think that will take a backseat now. And the Fed also has realized that it's putting too much stress on the balance sheets of the banks, and that's why it's taken that stance that probably there'll be one more hike. In a way, it helps the Fed also to an extent, because the banks will now cut down on their credit growth, right? So that itself helps in consumption being curbed. And that's what the ultimate aim of the Fed was, by increasing these rates to, curb the consumption frenzy in the US and probably bring on a slowdown, not a recession exactly, but a slowdown. And that's the base case that we're playing with. That's why we believe that even though the world will go through a choppy phase, and frankly, I mean, as you just now have said, that the oil prices have shot up thanks to the OPEC countries cutting off the supplies by probably 1 million barrels a day or something of that sort. The fact is that adds to the already choppiness in the market. And our belief is that because they've preempted that there's going to be a fall in demand in crude, and that's why they've taken that cut in the output as such, and maybe that's what they're looking out for. So our feel is that the world will be a bit of a choppy place to be in, and that's why probably a safe haven would be in India. But frankly, India is looking at a tight band in trade, because for India to start moving up, you need the world to stabilize, which is not going to happen for at least a couple of quarters.
Dinshaw, afternoon. So this tight band that Indian markets are likely to trade in, does it offer an attractive accumulation opportunity for you, or are you just going to hold on to your money and invest at a later stage, because it's not that the market is running away up or down?
Right. Rima, actually, we love these kind of markets, because we believe that these are the markets where we get an opportunity to pick our stocks, take our time to accumulate on them. In fact, that's what we've been telling our investors of late, that if you want to come into the markets today, we want them to come into the markets today, but stagger it out, right? I mean, just stagger it out over, say, 5 months or so, because that's what you're going to do. I mean, we're going to identify our stocks, play around with them, as in accumulate them as and when we feel the prices are right to pick it up. In fact, you've seen that, right? The market started at a high of 18, I'm talking about the year, per se, 18,300 odd, and went below 17 and now back again to 17 and a half or so. So it's obvious that they'll get enough opportunities to pick out the names that you like, and we've been sticking to those.
All right. Hi, Dinshaw. Dinshaw, give us some direction then. If this sort of a market, which is a little bit wobbly, is giving it a great chance to get into, what all have you all got into? I mean, in the recent past. In the past, you'll have mentioned a couple of stocks. I think a few months ago, we discussed a mid-cap IT company. I think that was L&D Infotech. We also discussed, I think, Campus. What else have you all picked up in the last few months in this sort of market volatility?
Well, Nigel, the mid-cap IT company isn't L&D Infotech, so you're wrong on that.
There was a mid-cap IT company we discussed in November.
Yeah, but it was
the name could be.
It was a travel-related, not mid-cap, probably a small-cap IT company, which was more to do with travel and stuff like that. So that was the name. Campus was there. Actually, we've been not adding to Campus. Actually, consumption names per se, we've not been adding to. Because we believe that things are not looking too ripe right now. Though we did chop off a few, not chop off, rather we chopped off the weightages in a few names in the consumption space. and we've not been in a hurry to add back to those, though we are very comfortable in the mid to long term. But I think the immediate short term, because of, as you mentioned earlier, El Nino may just pull back on the rural demand front. Even the urban demand is going through a stress today. So that's why we believe that it's better to stay out of these. I mean, not stay away, and probably build them up as and when you see the valuations really coming to screaming levels as such. So that's what we'll be doing here. But apart from that, we've been adding to the names where, like finance sector, we've been very comfortable there. We believe that though the call there that I think the whole market had taken was that the NIMs were peaking out, and that's why the growth may stagnate from here on. But our feel is that with the credit growth picking up, probably even a compressed NIM will compensate. The growth itself will compensate for those compressed NIMs. So that's where we're comfortable with. In fact, we've recently added to our portfolio in one other name, which is a NBFC in the mortgage space. So we've added there also as such, and we're more comfortable in that space today.
Dinshaw, hi, good afternoon. Since you're talking finance, of course, the next big talking point, especially for some of the NBFCs, retail-focused NBFCs, is going to be Jio's entry, right? With Jio Financial Services coming in with their massive balance sheet, big might. So how are you sort of preparing for that? And do you think that could start about a derating of sorts in stocks like, let's say, Bajaj Finance, which I think in the past you folks have liked quite a bit?
Yeah, actually, I agree with you, because I think there's some spaces where the valuations are totally stretched, like the name that you just took. I don't think those valuations can remain at those levels with a big name like a Reliance Jio coming into that space per se. So our feel is that, yeah, you have to be very careful in that space per se. And that's why I said that the ones which we are looking at, in fact, by the way, NBFCs, we hardly have any today. We just got 2 or 3 of them in our portfolio, and they're more or less related to non-consumer, rather non-retail kind of consumption space, and non-retail, right? So that's what we're looking at. So that's where we remain. And yeah, I think I'll leave it there.
And just a word on banks as well, since you're, staying more with banks than NBFCs, what's the preference here?
So basically in the bank space, we're looking at retail-focused banks, mainly private sector banks, though there's one big PSU also with us, which is more retail-focused than most of the other PSUs are. So that's where we are. And I think there we are more comfortable, because if you go back in history and if you see all these economies which have gone through a 5 trillion phase from 2 to 5 trillion, you'll see that it's the banking space which has really given that boost, not only for the capexes that came into the economy, but also in terms of the consumption boost which came about because of this. So that's why we are more comfortable here, and we stick to that. In fact, our weight in the banking, the financial space itself is probably 40% plus today.
Dinshaw, great conversation. Thank you very much for joining in, and enjoy your holiday tomorrow. Get into a break. On the other side, we'll tell you what dealing rooms are